June 14th, the important announcement out of the Federal Reserve. I have all the details and what you need to know right here in the video, so let's get right into it. All right, now in this video, I do want to discuss the details of the announcement coming out of the Federal Reserve on June 14th and what this is going to mean for the American people, as this is a very important announcement and there will be consequences. Therefore, let's get into it and talk through what's going on. However, really quickly before we do, thanks so much for joining me. If you're new here or if you haven't done so yet, please make sure to subscribe by hitting the button right down below the video, as it's totally free to do so, and I'm here for you right by your side each and every day, watching all this new information hitting the wire, doing the research and breaking it all down into these short videos so you can stay posted on what's actually going on and how it may impact you, your money, your benefits, your lifestyle, your bank account, and of course anything popping up you can possibly grab and or take advantage of. So again, I'm here for you every single day, no matter what. I'm watching all the latest information coming out and again bringing it to you in these short videos to keep you posted on everything that's going on. And again, it is a very busy, confusing, and uncertain time. We've got to stick together through this. And again, I'm here for you no matter what. So please subscribe down below if you haven't done so yet. And let's get into it and talk about June 14th, the announcement out of the Federal Reserve. What can we expect and how is this going to impact us, the American people, going forward? Some great questions and something we certainly need to understand. All right, so June 14th is the date in which the Federal Reserve will be wrapping up their two-day FOMC meeting. Now, FOMC stands for Free Open Market Committee meeting, and essentially what that means is a bunch of economists with the Federal Reserve get together in a little room, they drink a bunch of coffee, and they probably talk a little bit about the economy. Now, I'm not really sure what goes on in that room, but this is what we anticipate is probably happening in there. Now, as a result of this, they do talk about the health of the economy, what is going on there, and should they raise interest rates? Now, remember this much. Starting back in early 2022, so well over a year ago, they came in and started aggressively raising interest rates to bring down inflation, right? So we've been seeing this very high inflation that we've been dealing with for a very long time now, for nearly 2 years, right? So mid 2021 it started? Yeah, it was about in the summer of 2021, inflation really started to heat up, right? And then obviously it topped out in the summer of 2022 last year. In fact, it was June of last year where inflation topped out at 9.1%. So it was about a year ago exactly when this inflation topped out. Now here we are. Inflation is still significantly higher than it should be. In fact, the Federal Reserve wants it to get down to 2 to 2.5%. I've said it before in other videos, good luck. I don't imagine that's going to happen unless we really see a crash and burn out of this economy, which, based on what's going on here, we're probably going to see that as well, right? Either way, let's talk about the details of what's coming out of the Federal Reserve on June 14th. Now, obviously, we are rapidly approaching June 14th at this time here, and I want to bring you the details as far as what is anticipated to be announced out of the Federal Reserve. Here's what's likely going to be happening. According to what I've been seeing out there and according to what all the expectations are, even with all of this economic uncertainty that's going on right now, it is still anticipated that the Federal Reserve will come out and raise interest rates yet again. Now, are they going to come out and raise 50 basis points? Probably not. Are they going to raise 75 basis points? Probably not. The consensus is they will probably raise another 25 basis points. Now, again, that is a quarter of 1%, okay? So that is what it is. And now, generally, this is what they do most times, but over the last year or so, we've seen them come in with 4 consecutive interest rate increases of 75 basis points. We've seen a number of 50 basis point rate hikes as well. And we've also seen a couple 25 basis point rate hikes. So this is the consensus as of right now as far as what they will be doing. Now, this meeting happens every 6 weeks where they come together and they re-examine the economy to see, do we need to continue raising interest rates? Well, we've heard it out of the chairman of the Federal Reserve, Jerome Powell, that this is going to be a bumpy ride. He's made it very, very clear. This is going to be bumpy here. There's going to be some economic pain. And it's going to be the situation that we're going to have to deal with here as far as raising interest rates to bring this inflation down. So we'll see here what they continue to do going forward. Now, there's a lot of people out there as well considering that the Federal Reserve is going to start cutting rates. And, we're probably going to start seeing that sometime soon as well. Now, again, we'll just see. We honestly don't have a clue what's going to happen until the Federal Reserve says it. And again, at this point, it's all just speculation until the Federal Reserve actually comes out with their meeting and the press conference from the chairman of the Federal Reserve shortly thereafter. Either way, now let's quickly talk about what this is going to mean for the American people. Well, first off, the average interest rate on a credit card right now is about 20%. Okay, well, if they continue to raise interest rates, guess what happens? This just jacks up the interest rate on any type of adjustable interest rates, as in like personal loans that may have an adjustable interest rate, lines of credit that have an adjustable interest rate, things like credit cards that have an adjustable interest rate. Anything that has an adjustable interest rate is going to continue to increase in, obviously the interest rate. Well, as a result of that, it means that any debts that we are carrying, like for a credit card, for example, if we're carrying a balance on a credit card and we unfortunately cannot pay it off because most people don't have any money right now, well, as a result of that, the interest rates will continue to increase, making it more and more and more expensive for the average person or virtually everybody to pay those balances off, because now we're paying more money in interest to the bank and not to the principal of that balance, right? So as a result of that, when they continue to raise interest rates like this, it's like, it's like putting the clamps on the economy, right? It continues to contract on the economy because as they continue to raise interest rates, less people have more disposable income or disposable discretionary money to go out there and spend on different things that we want to, right? But rather we need to focus more of our money on paying down our debt services, right? So as a result of that, this is the whole point behind the Federal Reserve and why they raise interest rates, is because it reduces the appetite for people to borrow money, to spend money, for businesses to borrow and spend money, because it costs more to have that credit. Does that kind of make sense? So that's the whole purpose behind it, is to basically disincentivize people to spend money and to borrow money, and to incentivize people to save money. Now, here's another interesting point about all this. So along with the Federal Reserve raising interest rates, like what they've been doing for well over a year now, have you noticed in your savings account, if you have one, the interest rate has gone up? Maybe you're now getting like 2.5%, maybe 3%, maybe 3.5%, or depending on the account, maybe even 4+% interest on your savings account. When was the last time you saw savings rates this high on a savings account? It's been a very long time, like a very, very long time, right? So this is what's happening, because that's exactly what they want to do. They want to disincentivize spending, which will bring down inflation, and they want to incentivize savings, okay? Now, the reverse will happen at some point. When the Federal Reserve comes in and starts cutting interest rates very aggressively, then guess what happens? It makes it more appealing to borrow money to go into debt for people, as in us, the consumers, as well as businesses, and it disincentivizes savings. In other words, they want us to spend more money to once again stimulate and to spur the economy back into growth. But that's only after a severe economic contraction and a recession, or even worse, whatever they want to call it. That's what they do in those types of situations as well. So, kind of makes sense? This is a little bit behind the scenes of what goes on with the Federal Reserve. It's actually not behind the scenes. This is just the fact of what is really going on, and the whole method behind the madness of raising and pivoting and cutting interest rates and all the things like that we always hear about. This is what's going on here. Either way, we will be getting that next announcement here very, very shortly from the Federal Reserve on June 14th. This is when they'll be wrapping up their 2-day FOMC meeting. And of course, we'll be getting that announcement on interest rates. What are they going to do, right? And then, most importantly, what's going to happen with the press conference from the chairman of the Federal Reserve, Jerome Powell, shortly thereafter that announcement, okay? That is what's most important. Now, one more thing I want to throw out there really quickly, which is, if you are involved or you are actively, engaged in any types of financial markets, like the crypto market, the stock market, bond market, anything like that, these markets are going to be very volatile during that time. I would just try to stay clear. Just protect yourself. Just throwing that out there. Not sure if many people are, but just want to say that just so we can all stay safe right now with everything going on. And again, you can protect your money as well, right, with all the volatility. However, it could possibly be a nice time to trade in the market as well. Just saying, not saying that this is financial advice in any way, shape, or form. Not saying that. I'm just saying a lot of volatility potentially also creates some opportunity, right? So anyway, just want to point this out for you really quickly. We got to watch all this stuff closely, as it will impact all of us going forward with interest rates and how much it's going to cost us to borrow money, whereas most people don't have any money right now. We're all floating balances on credit cards, and again, it's getting very expensive. Either way, I'll keep you posted. So again, please subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out any of the other thousands of videos here on the channel. Until next time, enjoy your day, take care, and catch you again later in the next video.